So what is a second charge? Essentially, a second charge is a second mortgage on your home provided to you by a new lender. The new lender will place a charge behind your existing lender's charge, hence the term second charge. So when and why would you use a second charge? Let's say, for example, you want to do some home improvements. You know the kind of thing, you want to extend the kitchen, create a new bedroom, bathroom, wet room. So you think, I'll approach my existing lender to see if they'll help. And for some reason, they say no. So then you think, okay, I'll try to remortgage to a new lender. But let's just say, for example, they say no as well. What then? So a first charge lender may say no for a whole host of different reasons. They all have their individual lending criteria. So you may be failing their affordability criteria, you may have recently become self-employed, you may have some impaired credit. For that reason, you then may want to approach a second charge lender. So what are the advantages of going to a second charge lender? Second charge lenders tend to have a broader underwriting criteria and there are more flexibility in their lending. So their rates are also very competitive. Their products can be innovative. For example, they'll allow you to overpay on your mortgage without any penalties. They can lend to you on a 20 to 30 year term, which can help massively with affordability. They'll also release money to you for a whole host of different reasons. For example, debt consolidation. They'll allow you to pay tax bills. They will allow you to raise money for business purposes. You'll find a lot of first charge lenders won't support this. But for me, one of the biggest advantages now is that the FCA now regulates this market space, which means that more brokers are giving advice in this area, treating customers fairly, and better outcomes for the client. So what are the disadvantages of having a second charge? Well, effectively, you do have two mortgages on your home. Now, despite rates being competitive, they're going to be much higher or slightly higher than what you're going to be offered with a first charge lender. If you have impaired credit, they're going to be even higher still. And of course, you have to keep up payments on your home because otherwise you run the risk of being repossessed.